Hello, everyone, and welcome back to another episode. My name is Jordan. I'm a millennial investor, and today we're going to go over the company Coinbase. Now, if you don't know me and you don't follow my track record, I invest in both dividend growth companies, very conservative defensive stocks, as well as growth companies, very hyper growth companies, as well as companies that are profitable and growing their market share in their moats overall. Now, a company that's very interesting that a lot of people talk about is Coinbase, and this is a company that's had a lot of hype recently due to its big partnerships with BlackRock, as well as the recent earnings that it just came out with. So I'm going to go over in this video all the important things that you need to know about Coinbase. Could this be the next company that I add to the growth portfolio? Well, we'll be answering that in this video, so stay tuned for all that good stuff. Before we jump into that, if you haven't checked it out already, my name is Jordan. I'm a millennial investor, and I'm currently offering a mentoring session opportunity. If you're interested in that, check that out down below, as well as Yada savings accounts, credit card referrals, and then of course the 124 people that have signed up for M1 Finance. You can be the next on the list and be number 125. So go ahead and check that out down below if you're interested. But other than that, guys, let's go ahead and jump straight into Coinbase. Now, Coinbase had this massive recent news earlier, and just the other day, the stock was up as much as almost 50% off the announcement of this news. BlackRock partners with Coinbase to offer Bitcoin access to institutional investors despite market downturn. It says here that common clients of Coinbase and BlackRock's investment management platform Aladdin will get access to crypto trading, custody, prime brokerage, and reporting capabilities, according to a statement on Thursday. Our institutional clients are increasingly interested in gaining exposure to digital assets markets and are focused on how to efficiently manage the operational lifecycle of these assets. Now, this is very interesting because this opens a whole other opportunity for Coinbase that wasn't there before. Now, I want to talk about where I think this company has been so far and where I think they're going in the future. As we all know, the amount of popularity for cryptocurrency and Bitcoin and brokerage users like Coinbase that are crypto brokerages exploded. You see, in 2020, it went from 2.8 million in monthly transacting users to 11.2. So that was an explosion. What about their revenue? If you look at their revenue in 2020 was a hot 1.2 billion and jumped all the way up to 7.8 billion. That's like a 6x in revenue or something like that. That is absolutely crazy. But the question is, what are we doing now? What is this looking like moving forward? Because we know last year, one of the main reasons why I thought that this company was really interesting, why I was interested in it, was its massive profit margins. You see, with that $7.8 billion in revenue, they were pouring in massive profits. $3.62 billion in profit. Look at that beautiful net income. If you take 3.62 and divide by last year's revenue of 7.84, they had profit margins in 2021 of 46.1%. That means out of every dollar they brought in of top line revenue, every time you sold or bought Bitcoin, out of every dollar that they brought in revenue, 46 cents of that was pure profit. So this company was raking in cash and forced this cash balance up significantly higher, from 1 billion up to 7 billion. Now, this brings me to where we're at today. This just came out the other day. They just reported revenue, and they just reported earnings, I should say. Coinbase GAAP EPS of negative $5, negative 4.98. That misses by $2.21, about doubles the losses compared to what analysts were projecting, and the revenue misses by a lot. Analysts were projecting about 868 million. They came in at 808. So a significant downturn. Now, furthermore, I want to mention is where this compares to year over year. Their revenue this quarter came in at 800 million. Last year, it was 2.23 billion. In case you were wondering, that means year over year, they grew revenue at a negative rate. They shrunk revenue by almost 64%. This company lost over half of its revenue, about 2/3 of its revenue to be exact, in a year time frame. Now, furthermore, let's talk about profitability. That sweet net income that we were talking about. Last year, they put up a pretty decent profit. Let me rephrase that. They put up an amazing profit. $1.6 billion in a quarter of pure profit. Well, what did they do this quarter? They put up a loss of about 1.1 billion. So significant losses there. And then the same things for the free cash flow. That's actually affecting their cash balance. Last year in this quarter, they were putting up 3.95 billion, almost 4 billion in free cash flow. And then this quarter, negative 3 billion. So that is starting to dwindle that cash balance quickly. Now, will this continue? I don't know. Maybe, maybe not. I honestly wouldn't be surprised if they start laying off workers if they keep losing money at this rate, but they've lowered that cash position from a 7.2 billion stance to 6 billion. Now, this could all open up a door of opportunity with a situation like BlackRock, and I know they're also working on things like an NFT marketplace, but I have to ask the question, what is the moat for a company like Coinbase? Now, I don't mean this in a negative or positive way. I want you to answer it seriously. What is to stop someone from investing in a brokerage like Coinbase and switch to another brokerage? Now, if you don't know me, I invest on Fidelity as well as I've used M1 Finance in the past. But what is to switch? What is to keep you from switching? Okay, if I wanted to leave a company that is my brokerage, what is really stopping me? You can transfer things over. You might have to pay a little small fee or whatever, but there's really not a whole lot stopping you. And honestly, if you're willing to sell your investments and move over, you can do it for free, and you can probably do it in about a week or so. What is to stop you from switching over from a Coinbase to a Robinhood or to one of these other crypto brokerages like a Voyager, even though they're going bankrupt, or one of these other ones like Celsius? There's a million crypto brokerages out there. What's to keep you from going from FTX, one of the big new startups out there? So I think that begs the question, will Coinbase continue to grow? Because the competition is ramping up, and I think we're starting to finally see that in the revenue numbers. Furthermore, I think the massive profits, the huge profit margins that they were putting up just a year or so ago have gone by the wayside. Profit margins over here at the highs of 60, 70, 80% are gone. Now, I think that this company will be profitable likely in 2022 moving forward, or even in later in 2023. But I think what's worrisome here is to see a company that's shrinking revenue by almost 2/3 year over year and losing money is not as attractive as it once was before. Now, the question is, where is it going in the future? I don't know. But I think if you look at this and you look at the stock chart, I think that investors have realized this and started to price in this pain a long time ago. Because if you look at the 5-year chart, okay, ever since this company went public back in around April of 2021, this company hit a high of about $350 during late 2021, about a year ago. Now, in that year's time, in a 1-year time frame, the company has went down 66% in value. Year to date, it's down 65, a very similar amount. So the fact that this company has went from the mid 200s, 300s down to under $100, even factoring in this move up, just the other day, I think this company actually hit a low of 40, as shocking as that is. So I think that this company is really interesting. I do think that this revenue will come back. I think that it won't stay this down forever. And I do think they will have an opportunity to grow their profit margins back up to a reasonable level. I don't think it'll ever get back to these 60, 70, 80% levels. But the main thing why I wouldn't want to invest in this company is not because of all these quantitative reasons, not because of all the numbers you're looking at. I love looking at numbers, I love comparing them, but at the end of the day, that's really not the reason why I invest in them. The reason why I invest in two companies, for example, is Salesforce and Amazon. What are the reasons why I invest in Amazon? What are the reasons why I invest in Salesforce? Now, don't get me wrong, if you look at the numbers behind these companies, they're absolutely beautiful. The revenue chart behind Salesforce is pretty much the best you'll ever find. The year-over-year growth for Amazon for the last decade has pretty much been the best that you'll find in the entire stock market, right? But the reason why I'm investing in these companies are not because of quantitative reasons. It's not because of things that have to do with the numbers. The reason why I invest in Amazon is because they're extremely sticky. Once you get started with Amazon Web Services, you build your whole business off of it. How are you ever going to leave? The switching costs are massive. If you want to move money off of Amazon Web Services, it's going to cost a fortune. They're building out massive logistics at a level that's unprecedented, and they're going to hopefully wipe out competitors like UPS and FedEx one day. The same thing like a Salesforce. Salesforce is a company that also has massive switching costs. You literally build your entire business from scratch, step by step, level by level, process by process, and then what's happening then? Are you going to leave? Even if they raise the price, you have 90% of your company built off of one platform. The risks that are associated with you leaving are extremely high. Now, this is not existent with a company like Coinbase, in my opinion. You can switch from one brokerage to another. You can use multiple. If one makes you mad or angry, there's really nothing from stopping you. And so really, I think we're going to get in a pricing game. The same thing with these brokerages like Fidelity, like Robinhood, where they had to lower their fees over and over and over again, basically to zero. I think you're going to see a similar story play out with Coinbase, where all these little fees and all these scalping of trading and selling and selling order flow to market makers, I think is going to go by the wayside. And the worst part of all this too is that this company is experiencing pretty heavy dilution just in the last year. Just in the last year or so, they've literally added from 204 million up to 220, a pretty reasonable dilution rate just over the last year, and it doesn't seem like it's going to be stopping anytime soon. So overall, it's not going to be a company I'm going to be adding to my portfolio. It's a decent company. I don't hate it. I don't love it, but it's not one that I'm interested in because it's not one that I can invest in confidently. Feel free to subscribe down below. Check out all the links down below as well, like I mentioned, like M1 Finance, credit card referrals, and all that good stuff. But other than that, guys, thank you so much for watching. I'm the Millennial Investor, and I'll catch you guys next time.